is forcing us to believe that on 16th of May we could see a big swing, because after 2004 market election verdict markets came down by 10%. With 2009 election verdict market went up by 10%. Do you think this time around traders and markets are prepared and the big spike may not be more than 3 to 4%?
Quite possible. I mean, it's quite possible, because I think there is probably better information this time than in the past, because even the opinion pollsters and even the exit pollsters might have revised their methodology to probably bring in a dose of reality. So I think depending on how the exit poll results are on Monday, I think there is a possibility that there may not be a huge swing also. A swing maybe of, I mean, 200 point swing is par for the course.
So Nifty goes to 7,000, let's say on 13th of May, if markets get what they want from the exit polls, will you be a seller at 7,000?
Well, I think at 7,000 one can probably start booking some profits, because I think even the best case scenario, I don't see the market going much beyond 7,200, 400 is a maximum. So at 7,000, I think you have made quite some money. So I think you should probably book some of the profits and hope that. And typically, most of the time, if you see, I mean, there's a trend towards what people seem to be thinking is the possibility. They seem to overstate what the market thinks. So therefore, I think it's better to be a bit cautious if market touches 7,000 by Tuesday, say.
Mr. Bhat, we were chatting with a global investor in India, earlier on in the morning in the show, and he was of the view that besides the pop that we may see in the market of, 10, 12, whatever percent after a strong NDA win, he would turn cautious on the market purely because of the fact that the WPI and CPI still remain a very, very big factor playing on the markets. From a global investor's point of view, that is a sticky zone, and that the RBI will remain hawkish for the rest of the year as well. Would you agree with that after 7,000 the market would sort of fall into a limbo, because macroeconomically everything is not right?
Absolutely, because given the state of the fisc, given the state of inflation, I don't see anything dramatic happening, because I think the fisc is in a much worse shape than what is made out to be. So therefore, the budget has to be somewhat harsh. And typically, anyone who gets a mandate, the first budget has to be harsh, because he has to show some results before he gets voted out, or before he's there's going to be election next time. So therefore, I think the hard decisions have to be taken in the first year. So I think they would probably do that. And again, if you translate into earnings growth, corporate health, things are pretty bad. So therefore, I think there would be some sort of a sentiment booster in the short run if the market gets what it wants. But after that, I think reality will start biting. And I think after the budget, I don't see the market really much different from where it is now. So the tinge of your market commentary is that you're cautious and bearish. No, I think it is worth playing what the market wants on May 16th. I think it's worth playing that. And after that, I think as in the run-up to the budget, I think it is time to be cautious, because the budget cannot be a please-all budget for sure. Surely, fair point. Yeah. Okay.
Mr. Bhat, what is your view on Infosys and the kind of downgrades which have suddenly erupted? This should have been long in the coming in any case.
Well, the market was unduly excited about somewhat weak results, I think. They thought that, the change in management is going to be, dramatic, and so I think it'll get reflected in phenomenal performance. And the market has come back to, the reality is coming back to bite, and I think it should probably correct, in my view.
So what is Infosys? More like a old Yash Chopra movie? You only enjoyed it late at night. It's not the trend of the future.
I don't think it is. Basically, it has surrendered its leadership position quite some time back. So therefore, I don't think it'll be the darling of the market for quite some time to come, unless the new management really changes things.
Would IT be the darling of the market? That's the question. I mean, Infosys aside, the rest of the IT basket also doesn't seem to be finding favor with the market right now.
Well, I think that is certainly a good hedge against huge volatility that you are likely to see in the market. I think people will continue to be invested there. But, the days of big returns from IT I think are over.
You had a different view 3 months ago.
Well, that time, because we are not really bargaining for such volatility. I think things were very uncertain. So that's the time, I think, and the rupee was also sort of much weaker than now. So I think that time it made sense to be in IT. But right now, I think rupee has strengthened quite a lot. I think it's strengthened almost 15% from its all-time lows. So that is going to bite one. But in the case of IT, you can't see the results immediately, because they hedge most of their receivables. So therefore, over time, you will see that this will get translated into slower earnings growth. And so therefore I don't see any great sort of potential earnings from there.
Yeah, I mean Q4 was okay, they were able to hedge very well. So you made a point that as an institutional investor you don't have the liberty of sitting on cash.
Yep.
Assuming that you will be a seller if markets appreciate, what would you like to buy then?
Well, first I think the big performers you have to exit, and thereafter I think if the direction seems to be right, or the vision of the new government is right, I think you have to concentrate on cyclicals, take bets on infrastructure stocks, take some bets on industrials. Of course, you continue to be over-invested in private sector banks. Maybe as a hedge you should also have some IT, but stay out of public sector banks, because that is really going to have some correction because the stressed assets are too high. Capital issues are too very big for any government to take a quick call on that. I think it will take some time for public sector banks to come back to play. So I think these are the areas where you should be: private sector banks, infrastructure, industrials, autos, IT.
Why autos? Because this trend continues to, lower down. We've seen that in the April sales data as well. And this has not been just a two-wheeler, four-wheeler thing. It's been across the board.
Well, I think the quick turnaround you will really see there. If the confidence returns to the market, if the confidence returns to investors and to the economy, I think you will see a quick turnaround there. And I think that it is worthwhile taking a bet on at least the two-wheelers there. The four-wheelers will probably take some time to revive. But I think as a delta sort of a play, I think you need to be in autos.
Do you think the real story for this market is not Modi, rupee, earnings or macro? It is under ownership, lack of participation, and then complete absentee from retail investor?
That has been a story for quite some time. I think since 2008, I think retail investors have not come back. So if anything, you see the folios in mutual fund companies coming down quite dramatically. So retail investors completely out. So it is now sort of a three-leg play. You have domestic institutional investors, you have foreign institutional investors, and high net worth individuals. There's only three participants in the market, but the participation of these three are quite good. So therefore, domestic institutional investors have been big sellers for ages now. FIIs have been big buyers for ages now, and the HNIs and the speculators sort of front run both of these. So I think that is the structure of the market.
Investor. So let's hear it from two classes. How are you approaching this market?
Well, I think as an institutional investor, as I said, you need to be invested in equities, and you need to keep protecting yourself when big events happen. But as HNI investor, I think you need to play on all these big events are the ones where if you get it right, you can make money for the whole year. So therefore, you need to participate in that through options or futures.
Mr. Bhat, you've also talked about, a big hope for the energy sector for when the new government comes in. And we've also heard it of late, provided it is a NDA government at the top, that they are extremely bullish on the prospects of what they can and cannot do with the energy space. Within energy, what is it that you're liking right now?
Well, I think the big difference a policy change would make is for the BPCLs, HPCLs and IOCs. I think these are the ones who have huge retail assets, who need to become profitable on that front. And then it can be a huge difference. I think if the subsidy regime is completely revamped, I think it is these companies which can really give you a huge sort of a return, because they have huge assets on the ground which don't yield anything. So even if they stop losing money on that front, I think there is a huge upside there.
A lot of our viewers are retail in nature, and the big question for a retail investor has been that should they participate or should they not participate. For those who've participated, they are in the money, but majority of the retail investors, unfortunately, in this leg of the rally have not participated. How should they approach the market now? Has the train left the station for them, or they should still jump in now?
Well, I think the retail investors whose capacity to take losses is quite limited, I think they should wait for May 16th and a correction thereafter, and that is when they should enter with a 2-year horizon in mind. I think they should be able to make good money.
So for those who are buying now, are they buying the market for the last 10%, for the last 15%?
Yeah, I think they are doing that, and so they should really exit immediately after May 16th.
So do you think the new bull market has not started?
Bull market will start after I think the budget is presented and after the vision of the government is known to the public at large, and that is when I think there will be a slow grind upwards.
So what is it so disastrous that could come out in this budget? You've talked about it extremely hawkish and a bad budget in the sense not really market friendly. What is it that your biggest fear is in this budget?
Well, of course, I think the fiscal situation is in my view, dramatically worse than what is presented, and 4.6% is nowhere near reality. It will be probably somewhere near about 5% plus for sure. Plus, you have to address the huge problem about subsidies. And I think that is something that these are the hard decisions that they have to take about subsidies, about revamping the infrastructure, because the investment intentions are so very weak that the government has to take the lead in terms of investment. So therefore, there would be probably some more fiscal deficit, but the quality of the deficit might be much better than what it has been. So I think these are the tough decisions they have to take. They have to implement GST. They have to get the states on board. I think some of these decisions would be expected in the budget, and so therefore it cannot be a please all budget. It is not as if there will be tax cuts everywhere. I don't think that is the government can afford that. The government has to mobilize more taxes, more revenues, and see how they can use it more effectively than it has been done in the past.
Mr. Bhat, for the longest time, markets have disowned PSU stocks. They were called as the ugly ducklings of this market, but now PSUs as a group are making a comeback. PSU banks, PSU industrials, PSU miners. So it's turning out to be a strong summer for PSUs. Do you buy the argument that India regime will be better for PSU group, for the PSU group in general? Because PSUs is where the balance sheet strength is. And if indeed the capex cycle has to pick up, it could be fueled by PSU companies, names like Coal India, GAIL, Engineers India, maybe a BL or a BML.
Well, yes, I think that is the expectation, because finally this is where society's money has been invested in very large measure over the last several decades, and which is not giving adequate returns. So if you have to make a dramatic change in terms of sentiment, that is where I think work has to be done, and I am sure the new government would take those steps.
Do you own PSU stocks?
Just a bit, yes.
Have you reduced your exposure to private banks?
Not yet.
Why is that?
That I think will continue to be the story, because my simple view is this, that PSU banks are going to have a tough time raising capital. So therefore, as long as they're not able to raise enough capital, the growth rate has to come down, because they cannot support further growth with the limited capital that they have. So therefore, an opportunity is being given to private sector banks to raise the bar, as it were, and increase their aggressive growth plans. And that is where I think value would still be seen in the private sector banks.
But is it just the smaller PSU banks, or even the big boys, the likes of SBI, or for that matter even now BOB?
All of them have problems of capital. I don't think they have enough capital to grow at, say, 20% plus sort of numbers over the next 2 years. So they need to raise capital, and since they are all quoted at sub book value, sub even adjusted book value, so therefore it is not worthwhile raising money from the market. The government has to pump in money. Government has allocated some measly 20,000 crores, when I think about 10 times that is required. So therefore, they will be having this complication, and the government has to make up its mind as to whether they're going to support them in terms of capital or not. So if they're going to support, I think they make very good buys. But if they're going to really talk about 20,000, 30,000 crores, I think they will give the sort of whole business to the private sector banks, and that's why one needs to be bullish on that.
I mean, the market share clearly is changing in favor of private
dramatically
banks.
Changed.
Okay, so I buy argument that why you should buy into private banks and avoid PSU banks. There is a structural problem there. But the problem for large cap private banks is that the FI limit in some of these private banks is either frozen or is about to get frozen, be it HDFC Bank, Axis Bank, HDFC Limited. So my limited point here is that the story could be great, but technically foreigners may not be allowed to buy into these banks.
Well, then the FI segment will quote at a huge premium. There will still be demand for that. And if there's such a huge premium, and if the growth opportunities look very appealing, there's a case for these banks to raise more capital. And FIs would be probably very interested in buying into those issues. So therefore, either way, it is not as if private sector banks will let go of that opportunity. They will grow much faster. So therefore, the consumption of capital will be much faster. So therefore, they will need to raise more capital. And that is the way you will address the problem of huge demand for their stocks from FIs.